Hey guys, today's lesson is over financial literacy and more specifically taxes. So this lesson has been brought to you by Taxes. In all actuality, it's the only one that actually sponsors this because as a teacher, I'm paid through taxes, so it's an actual sponsor. Oddly enough, I don't think they know they're sponsoring it, but they are. Let's get to it. So let's get into our video lesson on financial literacy and more specifically taxes. So there are 4 types of taxes that we are going to be covering in this video. Sales tax, property tax, income tax, and payroll tax. Income tax and payroll tax are probably the hardest to understand, but we're gonna get it. So let's start with sales tax. Sales tax is a tax you pay when you purchase or buy something. And if you've ever been to the store, you think the price is going to cost this much because that's what it says, but then you go to pay and actually a little bit more. That is the government taking some of the money. So this is a tax that is collected at the time of sale by the retailer or the person you're buying things from and passed on to the government. So it says, here you go, government, from them. Now they're obligated to do it. So it's not like the store is making you pay it. It's the government making the store make you pay it. So what is sales tax really used for? Well, sales tax is used to pay for state and local budget items like schools, roads, and fire departments. It mainly goes to the states. It's not really for the federal government and everything else. It is a state tax that is governed by the state level. So 45 states use the state sales tax. Texas is one of them where this video is created, and those that are watching this video in Texas have it. And Texas, we have a sales tax rate of 8.25%. So anytime you buy something, it's going to be there. So if you go to Little Caesars and you buy 2 $5 pizzas, that's $10. You're going to end up paying 82.5 cents, and it rounds up to 83 cents. So it's going to be 10.83. And so that's how that works. All right, so that is sales tax, things you buy and you have to pay sales tax on. Next is property tax. Now, property tax is taxes you pay on the land or building you own. And property tax is calculated by a local government where the property is located and paid by the owner of the property. So this is usually your city or local county or something like that calculates the property tax. And it's based on the value of your property. So if you have a more expensive house, you're going to have higher taxes. If you have a less expensive house, your taxes are going to be lower. So that's property tax. And what does property tax go for? Well, property tax is used to pay for water and sewer improvements, police officers, fire departments, schools, roads and highways, construction, libraries, and other services that benefit that community. So whatever your community is. So if you live in that city, wherever your school is, you help pay for the teachers at your school. Even if you don't have kids in that school, you're still actually, taxes from your property go towards paying for those teachers and schools. Next is income tax. Income tax is taxes you pay on your yearly salary. And this is income tax is collected once a year by the federal government and depends on how much money you made for the year. So federal government means like the United States of America if you're in the United States. So it is the entire government. So this is where it goes. And income tax is paid once a year. So that's just one time during the year you pay for income tax. And it's the individual's responsible. And it's usually around April 14th, April 15th, somewhere around there is like, I got to pay my taxes. So what does income tax go for? It's kind of like a general fund, and it's income tax is used to pay for national defense, like our army, military, healthcare, veterans, those that have served, natural resources, energy, environment, science, space, technology, and more, like our presidents and government entities. So that's what those go towards. And so that's kind of like a general fund that covers all of these things. So next you have payroll taxes. Now payroll taxes are taxes that are taken out of your paycheck by your employer. So your employer takes money out of your paycheck and then sends it to the government. So the employer pays the federal government directly on behalf of the employee. So you don't have to do it. Your employer just goes ahead and takes out the money and then gives it to the federal government. Again, to the federal government. Like if you live in the United States, it goes towards the United States or whatever country you live in. Now, payroll tax is not as general. It doesn't go for as much because it is not a general fund. It goes towards specific funds like Social Security and Medicare. So what is Social Security? Social Security is a foundation of economic security for millions of Americans, and these are usually retirees, disabled persons, or families of retired or disabled or deceased workers. And Medicare, on the other hand, Medicare is a federal health insurance. So it's like health insurance for people that are over 65 or certain younger people with disabilities. So that is how the government takes care of those individuals, and is through our payroll taxes. So again, income tax is taken out once a year, so you pay your income tax once a year. Payroll taxes are taken out by your employer every single paycheck. So let's go ahead and cover some of these. We're gonna go ask you some questions, and you're gonna see if you can figure out, is it sales tax, property tax, income tax, or payroll tax? So here we go. Each year, Trevor pays money to the federal government based on the amount of money he earns at his job. Which term best describes this tax? So what do you think? Which one of those is this? If Trevor pays money to the federal government, like the United States, based on the amount of money he earns at his job, which one is it? And this is each year, so every year he does this. Right. It is income tax because it's once a year and he is paying it himself. Next question. Mackenzie went to Target to buy a new pair of shoes for $15. When she went to the cash register, her total came to $17. What term best describes the type of tax that was added to the pair of shoes? Which one is that? Yeah, it's sales tax. It's when she was buying something, she had to pay a little bit more, and that is sales tax. Next question. Gracie worked for 2 weeks at Target. She calculates that with the hours she worked, her paycheck should be for $500. However, when she gets her paycheck, she is shocked to see she only received $450. What term best describes the type of tax taken out of her check? Right, because it's taken out of each paycheck and it's taken out by her employer, that is going to be payroll tax. Good. Now, next question. Miss Gilbert just bought a house and pays her mortgage each month. However, at the end of the year, she pays a tax to the local government to own the land. What term best describes the tax paid? Well, it's on property she owns, so it is property tax. Now, those are the 4 taxes that we have covered. There are more taxes, and you can get a lot more in depth on those taxes, but that's just kind of an overview and a basic understanding of those 4 taxes. All right, so now let's cover gross and net income. So what is gross and net income? This is income refers to the money that's incoming. Incoming! That's my favorite type of incoming thing that's coming is money coming in. I like that income. All right, so let's go ahead and talk about what is gross income. So gross income is the amount of money earned before taxes, your payroll taxes. So you're so excited, like SpongeBob here. You're so excited about these taxes and coming in. You're not excited about the taxes. You're excited about the money coming in. But then the taxes are taken out and you get your net income. So net income is the amount of money after taxes are taken out. So this is, and then you're left confused like SpongeBob. You're like, what happened to the money? I know I was supposed to make this much, but my paycheck says this much. What happened? Well, payroll taxes happened. So before is gross income, and it's gross, you don't get to keep all of that, right? Yeah. But then you have net income is the money after payroll taxes. So I do appreciate, though, that you do pay your taxes because that means I have a job. Yay! All right, so now let's talk about another visual for these. So some people refer to this as like a basketball going into the hoop. So a gross income is represented by the basketball and an amount of money before taxes. Your deduction, which is the Medicare, Social Security, and payroll taxes, all of those taxes are taken out. So those are your deductions that go through the net, and whatever comes out is your net income. And I realize the basketball doesn't change, but it's just kind of a visual of what comes out. So what goes in is your gross income, they take your deductions out, and then what's left is your net income. What would this look like as a paycheck? So let's look at a paycheck. Let's say that Sam here is he works at the store, and he made a paycheck of his $1,200. So gross income of the basketball represents the $1,200 or $1,200 that he was supposed to make. But then you have your deductions. So here's your deductions. They take out your federal tax withholdings of $208.10. Medicare gets $17.40, so you're paying health insurance for somebody. Social Security is $74.40, so you're helping those with disabled or elderly, paying for those. And then your total deductions end up being $299. So this is your payroll tax here, your deductions here. And then what's left is your net income of $900.10. So gross income is $1,200, net income is $900.10. So that's how this whole gross and net income work. So let's look at this example of gross and net income from our friend Brittany. The money Brittany earns before and after taxes is shown below, as well as the amount of money she spends and saves each month. So let's say that Brittany earns before taxes $5,200. Money earned after taxes is $4,300. Money spent each month is $3,200. Money she saved each month is $1,100. Which amount of money represents Brittany's net income? So think about what net income was. Which one of those represents Brittany's net income? Well, net income again is money earned after taxes are taken out. So the money that she would have would be for net income is $4,300. So in the same scenario, which amount of money represents Brittany's gross income? Right, the $5,200, because that is before taxes. Excellent. So let's try a couple different things. All right. So let's look at Sam. Sam worked for 23 hours last week at the burger spot. Sam makes $8 an hour at his job. What would be his gross income for last week? Well, if Sam makes $8 per hour, so every hour he makes $8, and he works for a total of 23 hours, what would be his gross income? Right, so we're going to end up doing 23 times 8. So if you did 23 times 8, you're going to get $184. Yay! But wait, that's his gross income. He still needs his deductions taken out, right? So his employer took $23 out of his paycheck for payroll taxes. What is Sam's net income? So I want you to figure out your net income. So if he made $184 gross income and his deductions or the payroll tax taken out is $23, what is his net income? Right, it's $161. So it's $184 minus $23 to get $161. So that is again an example of gross and net income. So this has been a financial literacy video lesson on taxes, which we again kind of simplified a lot of it. I know it can be a lot more complex than what we did and what we covered, and though there's more to it, but this is kind of a general overview to get you an idea of what these four taxes are: sales tax, property tax, income tax, and payroll tax, as well as what gross and net income is. So that was our goal. Hopefully you can understand those kind of and have a basic understanding. If you don't, please ask your teachers, email your teachers. We'd love to help you.